Hello, welcome to the Collective Shift channel. Matt here to share with you the latest from the macro space and crypto industry over the past 7 days. There's been a lot going on. We've got Bitcoin, Ethereum, and the entire crypto asset market reach all-time highs in recent days, and also several stock markets around the world also hitting all-time highs. So very exciting stuff, a lot to unpack. As always, we'll start with the Australian economy, move on to some global macro, followed by some biggest news out of the crypto industry, and then ending with my thoughts on the state of the crypto asset market and what I'm really looking at in the short term. Starting with Australia, and by far the biggest news of the week arguably happens today with the Australian government announcing a stance on to promise net zero emissions by 2050. So this kind of climate change policy, if you will, there's been a lot of pressure on the Australian government to make this promise towards carbon neutrality by 2050, in line with, I suppose, many other developed nations all around the world who have made similar promises, and that comes ahead of a major global climate change summit in Scotland, I believe, this year, in a week or two. So huge news. Why is it such huge news? Like trying to put our macro hats on and from an investment standpoint and just from an economic standpoint, why is this such big news? Really, it's going to change the composition of Australia's economy. So, with at the moment, compared to other countries around the world, agriculture and mining are proportionally, significant in the Australian economy relative to other countries. So those two industries obviously are very, beholden and dependent on the climate really if you're dragging it out to decades and decades and even centuries. So to have this kind of promise by the federal government today is really going to put in place, a series of changes that over time will essentially restructure the workings of the Australian economy, specifically to do with this mining rather and agricultural sectors. So why hasn't the Australian government done it to date? Up until why they leave it till today? Well, there's been a lot of pressure over the past months and even years, really, by particularly resistance from the Nationals, so almost like a partner party that is like tied with the Liberal Party. So, a lot of short-term outlook by the Nationals, really, or really, yeah, like looking after their own interests, which is, completely expected, really, of any party, whether it's in Australia or all around the world. There has been a lot of worry about, the livelihood and I suppose the success, long-term success of industries in Queensland, particularly mining and agriculture. A lot of stress and worry from people in those sectors about what's going to happen to their jobs if the Australian government kind of switches its stance towards a lot more greener future. Um, so those interests and resistances have kind of been, dealt with and discussed over the years. And finally, I think it was on the weekend that the Nationals gave it the essentially the green light to go ahead and the federal government to announce this, what they've done today. Um, and actually, that's kind of come with the federal government or the Liberals having to essentially promise to, invest heavily into the areas which will be most impacted, which makes complete sense, really. Um, and the government actually is estimating job growth, net job growth in these areas, which will be most heavily affected. So, sure, this won't happen tomorrow, but it's good to see some sort of roadmap and several years, multiple years long roadmap that will eventually arrive at 2050, hopefully with Australia being a net zero emitter of carbon. So yeah, really huge news today that I wanted to start off with. Continue to see it's been a narrative over the past few weeks that I've been updating you all on. And really just the rising prices of oil and other commodities. I think we saw zinc and aluminium at 10 to 15-year highs last week. Copper has been going on an absolute tear. going to multi-year highs, and same with oil and coal as well. Um, Several ways that impacts obviously businesses and inputs of costs to produce and manufacture goods and provide services. But then there's more direct ways where it hits, you and me, the consumer. And a good example here is fuel prices. So in Australia, they've hit record highs, and I think the national average over the past 12 months is the highest it's ever been, if I'm remembering correctly. So again, as Australia is unwinding and lockdowns are easing, it's kind of happened at a somewhat of an unfortunate time for everyday Australian consumers. As we're living through a time when the cost of living is increasingly stressful, the rising cost of living for families. So like very high petrol prices or historically high petrol prices are definitely not helping in that regard. But um, sticking with the macro theme, it's definitely something worth monitoring and updating you all on, because it really adds to that inflationary pressure and the rising costs of goods and services. With higher fuel prices, it really just ties in. It's one more data point where we can point to, hey, it's getting a lot more expensive to live as an everyday citizen, and that plays heavily into inflation rates, which then, yeah, as we've said in previous episodes and installments of this weekly segment, the inflationary pressures and the rate of inflation has so much weighting on what central banks do with their monetary policy and interest rates and the amount of money they will inject into an economy. So it all ties in together and it all impacts us at the end of the day. If not from just our costs and everyday living expenses, it also impacts us as investors. Sticking with this, I suppose, yeah, huge rise in the price of coal as well. It's also kind of happening at an interesting geopolitical moment in geopolitics, really, with Australia and China still not on, really, really good terms to um, so, but you're also seeing a huge shortage in power or needs for electricity and power and energy in China. That hasn't really gone away in the past week or several weeks, and now China heading into winter. It'll be interesting to see whether China does start letting or inviting, I suppose, imports of coal from Australia. So, just wanted to point that out there. Huge developments over the past week in terms of the unwinding of lockdowns and restrictions in Victoria and New South Wales, so Australia's two most populous states, which account for over half of the Australian population. So anything to do with those two states combined is definitely very important news for me to be sharing with you. We saw, yeah, Monday, 18th of October, so last Monday, New South Wales reached 80% fully vaccination, and now they've got that target of opening their economy even more, so, or a full reopening from the 1st of December. And Victoria, it was last Thursday, I believe, where the state um, lifted their lockdown and went into basically like a soft rollout of lockdown. And I think this Friday, October, yeah, later this week, it will be Victoria lifting restrictions even further, which will allow, Victorians to go to gyms or go out to restaurants, and see more people, go to different houses and things like that. So why does this all matter? Again, putting our macro hats on, this is all super important because it's essentially getting people back to work and getting businesses back operating. And particularly for retail, this is obviously a very, very busy time of the year. So very welcome news for retailers to be opening at this time of the year. So um, very promising news and encouraging news just from I suppose, an economic standpoint. Um, and yeah, that's notwithstanding obviously the very great just personal aspect of it, just to reopen and see friends and family and whatnot. Sticking with the stock market, the Australian stock market has performed quite well over the past week, and Over in the US, we've seen the US hit record highs in the Nasdaq, the Dow Jones, and the S&P. So those three major stock indexes in the US. Again, as I've said in previous weeks, it's been reporting season, so the third quarter reporting of these listed companies. That's always so important because you'll kind of see trends in these reporting seasons. So in this case, in the US, the quarter three earnings reports have been by far and wide a lot better than what the market had anticipated. I think I read something earlier yesterday. I think it was about 80% of publicly listed companies that had reported their third quarter earnings had actually beaten the market expectations in terms of, revenue, earnings, profit, things like that. So it's a very strong indicator that the economy in the US is chugging along, quite well and better than expected, and that has been reflected in essentially a re-rating of these companies and increases in stock prices. Hence, you're seeing the actual indices and stock markets hitting record highs as well. So one of the biggest winners, I suppose, of the past 3 weeks of earnings has been Tesla, which was just yesterday, I believe, jumped 12% on the back of their earnings and actually topped $1 trillion in their market cap. So they would join the likes of Apple with a market cap above 1 trillion. Over in Europe, much like Australia and the US, reporting season, and yeah, you've seen European markets climb as well as Australian and the US. So no surprises there. Once you see, the US lift, you tend to see the others follow that. Um, Alrighty, onto the crypto segment for this week, and by far the biggest news was the launch of the very, very first Bitcoin ETF or Bitcoin Exchange Traded Fund in the US. So a monumental day after about 6 to 8 years of applications to register a Bitcoin ETF that had time and time again, dozens and dozens of applications being knocked back and rejected essentially by regulators or agencies saying, no, it's too risky. We don't want investors to have exposure to ETFs tied to Bitcoin. After 6 to 8 years of that, 6 to 8, um, finally it launched the very first one, which was ProShares. Administered or launched by ProShares. That happened, yeah, last Tuesday, and then there was Valkyrie's ETF, so another separate Bitcoin futures ETF launched later in the week, and then at the time of recording, I think we're just hours away. I think it's tonight, Australian time, or Victorian Australian Eastern Daylight Time, that the third one will launch, and that is VanEck, so VANECK. They'll be launching their Bitcoin futures ETF. So very important to have multiple ETFs. You don't want the SEC or the securities kind of regulator in the US. You don't want them just to kind of let one list whilst rejecting all of the others, because that kind of gets into a bit murky territory of just kind of benefiting one sort of ETF issuer, which really isn't a good look at all. So um, yeah, it blew expectations, the launch of this first ETF, the ProShares one. I think it passed $1 billion in volume traded over the first 2 days, which yeah, had if it hadn't happened at all, it was definitely the first time it had happened in several decades, adjusting for inflation, and to have that sort of volume was just, yeah, was just um, so exciting to see, really. It was a lot of criticism and such, as I spoke about last week, that the design of this ETF being based on Bitcoin futures wasn't overly popular within the crypto space, but we saw the market kind of just overlook those inefficiencies, and to see that much further and demand to get exposure to Bitcoin was just super refreshing and very promising to see. So as I covered last week, why is this so important? Like why can't all these businesses and family offices and hedge funds, why can't they just buy Bitcoin on Coinbase or Gemini or FTX US? How come why is this Bitcoin ETF such big news? Well, it's essentially just a lot more of a tax compliant and efficient way for these IRAs, they're called. So like I forgot what the acronym stands for, but they're essentially like superannuation funds that we have here in Australia. 401ks is another type of vehicle, I suppose, through which they're also like retirement accounts as well, where they can get exposure to ETFs and purchase ETFs, meaning that they now can get exposure to Bitcoin, where previously it was a bit murky on whether they could actually buy other types of exposure to Bitcoin or had to, for example, buy Grayscale's GBTC, as some of you may have heard, which that itself has a lot of drawbacks just from a cost standpoint and a lot of inefficiencies. So that's essentially the biggest benefit from this whole news of all these ETFs launching. And I suppose a secondary big benefit is just that it's just a sign of legitimization and a moment of significant validation for the broader Bitcoin asset class and the crypto asset class secondary to that. Bitcoin, it's been through a lot in its, 13 years or so of existence, been through many different, eras of, I suppose, what it has been perceived as. What I love about Bitcoin is the fact that the technology has actually been literally the same all these 13 years, but you've seen it go through so many different waves of, I suppose, storylines and narratives about what it is, who it benefits. And it's a really growing up moment essentially for Bitcoin. That's another huge takeaway that I want you to understand about why all the time Bitcoin ETF is making the headlines. Um, so so yeah, we saw I think I've got here Valkyrie obviously launched late last week and Van Eck launching tonight. So you'll continue to see more Bitcoin ETF news making the headlines in the next, well, several weeks, in my opinion. And you'll start to see, well, my prediction is at least, is you'll start to see more pressure being put on the SEC or the securities regulator about, okay, how come now we can't have an ETF that's tied to actual Bitcoin or backed by spot Bitcoin, you may have heard it called, as opposed to Bitcoin futures, which is just a derivative of Bitcoin, which doesn't actually mean you're investing in Bitcoin itself. I think the success of these will trigger a lot of pressure and questions on the SEC as to, how come now? Surely we've proved ourselves now as an industry, or surely it's proven the demand for Bitcoin is there. Why not just make it into a legitimate Bitcoin ETF? Why is that so lucrative and sought after by the industry? Well, it's cheaper in many ways, it's just more efficient to run an ETF that isn't tied to futures. And you've got things like rolling costs, which don't really come into the frame when you have an ETF that's based on spot Bitcoin. And then also just from the investment side of things and I guess from an investment case, that scarcity of Bitcoin really comes into play when you've got an ETF based on spot Bitcoin, because that ETF issuer, if it is physically settled, would have to purchase physical Bitcoin. And physical Bitcoin, that's a bit of a yeah, misnomer or whatever, but they would have to store Bitcoin and back the value of that would back up the ETF. So to sum it up, I think you'll start to see a lot of pressure going towards, hey, now I think it's time that we launch a Bitcoin ETF. But all steps, like one week at a time, as they say, and really this futures ETF is just huge news, and I think a moment should be taken just to celebrate that and just to appreciate that the fact it's happened. It was a strong week of adoption news last week. So we have here Pimco saying it's an investment firm specializing in fixed income that manages 2.1 or $2.2 trillion under management, and its CIO has come out and told CNBC that Pimco plans to invest more into cryptocurrencies. So yeah, that's just another huge, traditional, someone from traditional finance or TradFi, as you might see it referred to as, another entity from TradFi coming out and saying that they are looking to get involved in crypto or gain exposure to crypto assets for their clients. This, another huge adoption news, this one a bit more fresh. I think this happened today or last night in Australian time, was Mastercard signing up with Bakkt. So it's like a Bitcoin exchange slash custodian. So Mastercard announced that it is preparing to integrate cryptocurrencies into its loyalty program offerings for banks that are based in the US, as well as merchants and fintech firms that are connected to the Mastercard payments network. Again, those that are based in the US. So I think Bakkt, BAKKT, which actually went public on the US, one of the US stock markets. I think it was the New York Stock Exchange last week. Its share prices went up. I think it more than doubled on the back of this news, and this announcement with Mastercard. So I feel like it's every other week where I'm either sharing with all of you, significant news either from Visa or Mastercard. They seem to keep alternating, and whether it's either Bitcoin payments or involvement with non-fungible tokens, as we've seen Visa probably be stronger in that regard compared to Mastercard. All very, very exciting. Other adoption news today, I think this was also today, was BlockFi. So one of the biggest, I guess, centralized crypto custodians in the world. They partnered with Neuberger Berman to develop and issue a series of digital asset management products and strategies. So Neuberger Berman is a 82-year-old private, independent, employee-owned investment manager, and they manage 437 billion in client assets as of the end of September. So again, looking forward to seeing those products go out in the coming weeks and months. All right, some huge news from the local scene here in Australia, the local crypto and digital asset scene, was the submission of a report after several months of, I think it was 3 hearings altogether in front of the one of the Senate committees there called the Select Committee um, for Technology and Financial Center. Um, I believe that's the Australian Senate Select Committee on Australia as a technology and financial center. So they submitted their report, and that was kind of led by Senator Bragg, I believe, Bragg. Yeah, Andrew Bragg, and he submitted the report this morning. I saw there was a photo of him and the Australian Government Treasurer, Josh Frydenberg. So there were 12 recommendations altogether. Um, some surprising ones, or some exciting ones rather, and some that were probably more expected. And yeah, including one of the probably one of the more exciting ones from my perspective was this, I suppose, recommendation to recognize decentralized autonomous organizations, or DAOs, DAO or DAO, to recognize those as legal structures. So that was probably my favorite, more so probably because I wasn't, expecting it as such compared to other ones that were to do with licensing of Australian crypto entities, particularly exchanges. And also there were other ones to do with simplifying I guess the tax regulations surrounding crypto assets. We've seen a lot of confusion and a lot of headaches, both for Australian citizens, Australian taxpayers, really. Like, so that includes entities that are, listed and domiciled in Australia. And then you've also seen headaches from, I would imagine, speaking on their behalf, would be the Australian Taxation Office, just and accountants, the poor accountants as well. Um, Really, the confusion, it's not just in Australia, to be honest, it's every country, but the amount of headaches it's causing to do with just taxing crypto assets is just very, very tricky. And I'm definitely not envious of the tax ATO's position. It's a very hard job. Um, Trying to figure out, okay, if I've staked my cryptocurrency, if I've deposited into a DeFi protocol, a DeFi lending protocol, and I'm staking my assets, but in return, I'm getting another token that represents like that interest-bearing token. Is that a capital gains event? Because technically you're getting a different asset back. So many questions like that, which are very, very difficult to work out for accountants. And it would just be great to see some sort of, I guess, black and white kind of suggestion or recommendation by, well, the ATO, but really there's several countries going, as I said, going through these challenges. And I think with the pace of innovation in DeFi in particular, so decentralized finance, these protocols are getting increasingly complex, and the ability for individuals to earn interest and to stake their assets is very lucrative, and to earn a high percentage of interest such as 5 to 10%, it really is appealing. But to many, including myself, I really, part of me just like really doesn't want to get involved in any of that, just because I know how many headaches it would kind of cause, just in terms of figuring out how much capital gains or capital losses, like myself as an individual, will have to declare. And that's coming from me, someone who lives and breathes this stuff every day. So I can't imagine how confusing it must be for just an average, everyday kind of investor in the space. Definitely for the more passive investors, it's a bit more straightforward in terms of capital gains, but you've still got confusion. Probably, I know I'm rambling on a bit here, but probably one area of confusion that I talk a lot about with people is this concept of like a flow through asset. So if you've only got this token that's available on Uniswap or SushiSwap, like a decentralized exchange, and you can only buy that asset if you own some ETH. If I go onto Coinbase or Binance or FTX and I purchase 10,000 Australian dollars worth of ETH, in order to buy this new token, is that $10,000 worth of ETH that I spend, is that coming out of my holdings of ETH that I have as a long-term investment and I've held for several years? Figuring out that sort of stuff is very confusing. And again, I do not envy all the accountants and regulators out there who have to come up with some sort of rules and framework for this sort of stuff. But these recommendations are definitely going a long way towards that. For those of you, I will link the recommendations below, and there's also a statement from Blockchain Australia. So probably the industry in Australia, the crypto industry and digital asset industry, their lead representative entity. So they came out with a statement here, and there was a really good line, whether it was on this statement or I just saw. Basically, it's so much promising developments have happened as a result of these recommendations and getting these to the point of a recommendation and submission report. However, now it's all, yeah, here's the line here. I love this one. The work begins to put meaning to those words or to those recommendations, and in the development of an inclusive and progressive regulatory framework. So, yeah, a skeptical take, or not skeptical, but playing devil's advocate, you could just say, hey, these are all just words at the moment. When are they actually going to become ratified, or, really, put into something substantial that we can all, as industry participants, rely on with confidence? I think that's the biggest challenge now, but I look forward to sharing updates with you all. as those as this progresses, which I think Senator Bragg um, did have some sort of timeline of about 12 months, which he would like this to get to move through Parliament and hopefully become law. These recommendations. So yeah, very exciting stuff here for the Australian crypto industry. Just here, there was some news just before I started recording, actually, that there was some wording in Tesla's quarterly reports which kind of alluded to the fact that they were at least getting close to, I guess, relaunching their acceptance of cryptocurrency for payments of their products or cars. We saw, I think it was in January or February, Elon Musk and Tesla announced that, hey, we're going to start accepting Bitcoin as payment for Tesla cars. And then about a month later, they actually said, oh, wait, we didn't know um, Bitcoin emitted so much carbon or used up so much electricity in the mining process, which again, I just find so hard to believe that they didn't know that, given how much work they would have had to have done to research Bitcoin to see whether they could accept it. And I know that Bitcoin has actually, Tesla's done a lot of other Bitcoin initiatives in the past 12 months or so to do with mining as well. So that aside, it's promising to see Tesla, I guess, open to accepting payments in the near future. Elon Musk did say that they would be open to doing so if he saw a lot of improvements in the composition of Bitcoin mining's, I guess, energy input. So a trend I've been commenting on and sharing with you over the past year is just this continual shift towards greener energy being used as input for I guess Bitcoin miners. So a lot of renewables, whether you're seeing it in Canada or the US, and yeah, other parts of like Kazakhstan and stuff. Where you're seeing a lot of renewables actually being used as the input to mine Bitcoin, which is making it a lot cheaper relative to someone, using, coal bait like energy that's derived from like burning coal or something, which, can be more expensive. I know it definitely would be more expensive to mine Bitcoin here in Australia relative to somewhere like in Canada, which has like an abundance of renewables. So, um, it was kind of like a two-pronged one. This one, like it's like really, really promising from an adoption standpoint that Tesla's open that it's, potentially looking at relaunching crypto payments. And the second takeaway is that if it is more open, that infers that the Bitcoin mining is getting greener, which is we've seen a lot of evidence that that is already the case. But it's more validation that that really is the case. And just on that, I did want to bring up this one I saw yesterday. This story, Australia's largest Bitcoin mine is set to launch in Byron Bay this week, after local digital infrastructure company Mawson Infrastructure Group inked a deal with renewable energy powerhouse Quimbrook Infrastructure Partners. So setting the scene for a rollout of crypto mines across Australia. So um, yeah, renewable Bitcoin mining coming to Byron Bay. So very exciting stuff there. I think it was earlier a few weeks ago, Iris Energy, which is domiciled in Sydney, but I think they operate out of Canada in like British Columbia. They've been doing really well, and expanding their operations in Canada, which they did go public in the US, I think last month. So another example of, I suppose, innovation coming in the renewables Bitcoin mining space. So yeah, want to just loop that one in there as well. Sticking with adoption, I told you it was a big week for adoption. Coinbase has inked a deal with, well, the NBA as well as all the, I guess, derivatives and, associated brands. So like the women's NBA, the NBA G League, which is essentially like For all the AFL fans, it's like the VFL, or yeah, I guess the secondary league or the backup league, so to speak. And USA Basketball has also like essentially under the umbrella of NBA have signed a deal with Coinbase, and that does include the NBA itself, by the way. So wow, that is enormous, like enormous news for Coinbase and the broader crypto industry. Why is that the case? It just penetrates crypto more into, I guess, the mainstream psyche, or I guess, yeah, the mind share of the everyday person. Just the more that they see the likes of Coinbase sponsoring things, FTX, as we've seen this year, has like started to sponsor so many sporting just venues, and also taking on brand ambassadors like Tom Brady and Stephen Curry. So just the more of this that happens, the more awareness of crypto outside of just the crypto industry and bubble, the better, in my opinion. So this will definitely go a huge way towards that. NBA is definitely out of the American or US kind of sporting associations. They're definitely the most tech friendly, or the most progressive. You're seeing the likes of NBA Top Shot last year on the Flow blockchain that really just exploded, and arguably like was there right at the start of the boom in NFTs that we've seen really continue on into this year. Um, but yeah, so NBA once again kind of yeah, doing great things there with Coinbase. Sticking with adoption, it's not so much adoption, but more competition, you could say, in a way. But I still want to note it because of just the names involved and the amount of human and financial capital that is going into this venture. What is this venture I'm talking about? It is Facebook expanding and launching ultimately a metaverse. So, a metaverse, for those of you unaware, is essentially just a digital virtual area, for lack of a better term, um, I suppose, do things in that you would in real life, such as hang out with friends, or attend a conference, or go to the shops. Um, for those of you who are familiar with Second Life, it's essentially like that. And yeah, it's an area which is got the attention of crypto and NFTs over the past 12 months, with the likes of Decentraland, the Sandbox, Somnium Space. I think they're the main three. There might be another one in there, but they're kind of the main like crypto metaverses, for lack of a better term. And yeah, you've seen Facebook actually come out and really aggressively wanting to expand into launching a metaverse within the next decade. These things are at the cutting edge of technology, and like the development time is insane on these sorts of endeavors. But such a titan of the modern world, or this social media giant, like if anyone can do it quickly, it is Facebook. Whether or not that's a good or bad thing, I think most people would kind of get a bit, not spooked, but just be a bit concerned by this. I still have my questions about, it's almost, why did I even include it in this crypto update? I think part of it, the reason was that it's kind of just speaks to the ethos and values of the crypto space when a centralized company comes out and announces something that's similar, but it's actually kind of not the same. It's like same but different, if that saying goes. So you've got, so what do I mean by that? You've got Facebook coming out here and announcing a metaverse that's going to be controlled and owned and operated by Facebook, or that's a company name at the moment. They're actually looking to change the name of Facebook as well. Um, so you've got that, which they own the metaverse. And then you've got the crypto side of things, where the metaverse isn't owned by anyone. It's actually the important parts of the metaverse are deployed on through smart contracts, which are they live, for lack of a better term, they live on top of blockchains such as Ethereum, which are not owned by anyone. They run and are validated by computers all around the world, and which keep each other in check. so there doesn't have to be an owner, um, which allows for so much more trust and I suppose self-sovereignty just as an individual user. So I guess I wanted to put this in today's just because to highlight that difference. You've kind of got, one of the legacy firms kind of wanting to get involved in metaverses, but it's not really the same kind of concept just because of that controlling entity. Um, but hey, why did I say this could be competition? It's just because of how much like they're just throwing the kitchen sink at this thing, it seems like Zucks and his team there. They're going to spend over $10 billion on its metaverse division. And I believe they are hiring over 10,000 employees in Europe to help build this thing. So um, definitely not going to be the last you hear about this. Okay, moving on, I just wanted to highlight it was an enormous week in the crypto venture side of things. This year has been like no other from just a amount of financial capital entering the space. And why does that matter? It matters because like projects and protocols and apps can develop quicker with more resources. Like it's pretty straightforward. The more capital you have in the crypto universe or ecosystem or industry, the quicker you can create and put money and invest in, research and development, but then also invest in things like marketing and investing in recruiting, to be honest. Like the talent I've seen come into the space in the past 6 to 8 to 9 months has been like next level. And that's what extra financial capital enables. It just helps that become a bit more likely to happen when you have such huge amounts of money flowing through the industry. So some that I wanted to highlight here that were just last week, keep that in mind, just last week was Galaxy Interactive raising 325 million for a fund focused on, oh, there's that word again, metaverse and next generation games. So that is, yeah, that's tied to crypto and all backed by, blockchain technology. Also saw Variant Fund, so that is Jesse Walden's firm or venture firm that he basically left A16Z, so a huge venture capital firm that he left, I think, last year to start this Variant Fund. And they announced a $110 million fund to invest in crypto startups. And they also announced Li Jin, who's another kind of well-respected thought leader, for lack of a better term, and VC investor in the space. So she's joining Variant as a general partner. And essentially, you've got Variant here, more or less acquiring Legion's firm, which was called Atlia Ventures. So, yeah, very, very exciting stuff there. And then also Multicoin Capital, who are one of the more established venture firms in the crypto space. They are reportedly set to raise 250 million for their third crypto fund. So just huge news. We also saw FTX last week announce a raise of $420.69 million dollars for their, I think it was a Series B1 round, and that had such like recognizable names that weren't even from like the crypto ecosystem. So it was like BlackRock, and Tiger Global Management, and even an Ontario teachers pension plan had also invested in FTX. And we're also seeing other sorts of investment, not just VC firms, but the likes of, here we have a Korea Teachers Credit Union. They are planning to start investing in Bitcoin, not directly in Bitcoin itself, but just getting exposure to it via the likes of Bitcoin ETFs as well. So they manage $40 billion in assets. So even if a slither of that goes towards exposure to Bitcoin, that is a huge story. And that would actually be the first instance of a pension fund in South Korea investing in Bitcoin. So for those members watching this, I continue to encourage you to stay up to date with all the venture funding news that we wrap up every Sunday on the member platform. Honestly, this one that Kinji put together, he's our latest research analyst to join the team here at Collective Shift. He had a beast of a Sunday fun day to put together last week, which really speaks to just the state of how frothy you could argue in a way some of these valuations are getting, but it really just gives you a understanding of just how much capital is just flooding into this space. So like we've got 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 20, 23 funding announcements, and that actually isn't even involving the raising by funds that I just went through over the past few minutes. These are more just for projects and companies that in the crypto space which are raising money. So these are one of my favorite posts that go out to members more so because I just use it as a springboard for my research. I really love looking at the ones that are lower down the list because they're normally more of the early stage projects, which is what I specialize in and what I love kind of, delving into. But it's all there for members if you wanted to do some of your own research as well. All right, moving on to Bitcoin, and wow, what a moment it was last week when we saw um, Bitcoin hit all-time highs of, it depends on what exchange, but most of them got to about 66,800. Some of them almost touched 67,000 US dollars. And that happened, on the 20th of October. So yeah, about last Wednesday, Thursday, depending on where you were in the world. Yeah, that just came out about a few hours after I shot and recorded my last weekly update actually. And I did say I expect Bitcoin to hit all-time highs by December 31st. Like I kept saying I just can't imagine a scenario where I look back at the year and Bitcoin hasn't hit all-time highs, but lo and behold, it did about, I think it was, yeah, somewhere about like 8, 10, 12 hours after I made those comments. So yeah, very quick there. And I suppose the takeaway I want you to focus on is that we really haven't seen much of a pullback in Bitcoin's price. Like normally when you have such a strong rally and then you actually see Bitcoin break through its all-time highs, it's not really uncommon to see a heavy retracement. Like I'm talking 10 to 20%. And then you'll see Bitcoin trading sideways for, a sustained period. However, in this case, like the support's been like it's been very healthy to be honest, like above that 60,000 level. Um, so as we've seen, Checkmate, our on-chain analyst that contributes to the Collective Shift platform, as he's been pointing out, the old hands essentially, like the long-term Bitcoin investors, their on-chain activity is like it's very promising. Like we're not seeing many long-term Bitcoin investors selling or at least taking profits. So again, that shows a conviction that Bitcoin is perhaps destined to go even higher. It's definitely my opinion that by the end of the year, we're going to go like above 70,000. Um, and even I can picture a scenario this year where Bitcoin goes above 80,000 and even above 85,000. I don't think the top's in, I suppose, is what I'm saying. Um, I think we're just starting to see retail really start to enter the space at a level that's a bit more reminiscent of 3 or 4 years ago. And that in and of itself tends to be a pretty strong indicator. So if we look down at those three major moving averages, they're all now healthily, on the daily time frame at least, all now healthily below Bitcoin's price, which is what we want to see, at least if you are a Bitcoin investor at the moment. And a strong momentum indicator here, the relative strength index. You can see how this bit of a pullback and kind of range bound trading over the past 4 or 5 days has really like helped the RSI get back from overbought territory and actually down towards more of a neutral kind of more of a neutral kind of rating here at 62. So that's actually promising again for Bitcoin investors because it's showing that, Bitcoin's had a bit of time to cool down and not get so like overbought. Um, so yeah, onto Ethereum too. At the time of recording, 4,200 US dollars, which again, ETH hit all-time highs a bit after Bitcoin, but it was on this daily candle here on the 21st of October. So yeah, later last week on Thursday or Friday, depending on where you were. And it was very, very quick. It was very swift. It did get up to, yeah, well, at least on Bitstamp, $4,375. But yeah, had some strong support, just like Bitcoin. So again, still based like just about at all-time high levels for ETH at the moment. Um, so yeah, all green and all I think not yet over, at least for this cycle. I can see again ETH getting up towards 5,000, even over 5,000 before the year is over, and then that's when I would kind of expect the cycle to end and we would go into, you know, like a several, 6, 12, 18 month period of um well, I suppose technically a bear market from the all-time highs, but yeah, I definitely don't think it's over for ETH or Bitcoin in terms of going another leg higher in the coming weeks. Okay, I just wanted to wrap things up. Probably there was two, as I said last week, there were two major conferences. There was ETH Lisbon last week, which I've been meaning to catch up on. I did see that the Defiant did a really good job of recapping all the goings on at ETH Lisbon. So an Ethereum conference held in Lisbon. This I think was 3 or 4 days, and yeah, you can see several trends here that were really good summary by the Defiant. And we also had Solana. They had a huge conference, sorry, hackathon rather, called Ignition, and that went for I think it was 3, 4, 5 weeks. And I think as we shared in today's project discovery call, which yeah Nathan records, and um, Nathan and I then go on and put together these notes 5 days a week, or myself 3 days a week. I contribute to it, and Nathan does it solo 2 days a week. Where did we put it here? It was really up the top of the list today because whoever this is, Shek_dev, put together a Google sheet recapping like just all of the submissions for this Solana Ignition hackathon. And it really is, as I've said previously, hackathons and conferences are so underrated in terms of just investment opportunity. Like they are essentially they're like the harbingers, or the really they're like the preview of what's coming up in the next 12 to 18 months. Like I've seen it time and time again. Some of my best investments have come from just keeping up to date with trends that are so obvious to see in hackathons. And then that kind of informs my investment decision making. So I've linked that to members in the project discovery, today's project discovery post, and it was actually my number one for the day. But I will also link it below in the show notes. And again, thank you to Shek_dev there for putting that together. Probably just wrapping it up. What am I mainly looking forward to or looking to monitor over the next week or two? It's sound like a broken record, but it's Ethereum gas prices. This time it's a bit more, they've recovered, like they've definitely a lot healthier than what they were, about 30 days ago or so when they were about all-time high gas prices. Like sometimes it was costing me like $80 or $100 or so to transact on Ethereum. I would stress that that wasn't just a sending a token, like that would have been heaps cheaper. It was actually um, making a trade on Uniswap, which is tends to be, as you can see on this dashboard tends to be a bit more expensive relative to just a simple transfer, but still, those sorts of transaction fees are just way like totally not sustainable. So you're seeing continued adoption of the likes of Polygon, which passed 100 million total distinct addresses a few days ago or early last week, which was a big milestone. Arbit Arbitrum continues to see adoption, even though it's in kind of like a guarded launch, you could imagine, or you can think of it as at the moment. So Polygon is, it's not really a layer two solution, but think of it as like a scalability, a way to interact with Ethereum more or less. It's not entirely true, but it's just a way to transact um, with kind of Ethereum based applications. You can interact with them on Polygon and get heaps cheaper rates. And then you've got layer two solutions, which again are scalability network solutions just like Polygon. Oh well, yeah, scalability in the sense they're like Polygon, but they are actually layer two and they're a bit more tied to Ethereum. And their security is a bit more directly tied to Ethereum. So Arbitrum and Optimism are the two that everyone talks about, but you've also got ZK Sync, Starknet, and Immutable X. Those three are going live in the next, I think it's like 3, 4, 5 weeks. And then in addition to that, you've got Arbitrum releasing a big upgrade. Their Arbitrum Nitro upgrade is coming in November, and then Optimism is launching their OVM 2.0, which you don't really need to know how that works. It's more just they are, I guess, going to basically take the guardrails off what their launch has been at the moment. That's happening later in November, I believe. So those five layer two or scalability solutions, they're going to have huge benefits for Ethereum, in my opinion, just squashing down those transaction fees and really reducing the pressure on Ethereum to really continue to, be a place where everyone wants to transact, but at the moment it's just a bit prohibitive. And that's why you're seeing so many base layer chains and I guess EVM compatible blockchains such as like Near Protocol, Phantom, Binance Smart Chain. There's some others like Solana, Salo, um, Harmony, um, Avalanche is a huge one, Terra, Polkadot, um, Cosmos even. You're seeing all these sorts of ones really outperform ETH and outperform the market in the past 3 to 5 months. And I would expect that to continue, to be honest, for the coming, for the like just for the rest of the year. I think a huge part of that is I don't think Ethereum's gas fees are going to improve anytime soon, at least improve dramatically. And I also know that all of these blockchains that I just reeled off, they all, essentially every one of those has heavy subsidy programs and incentivization programs, which they are just chucking, or not chucking, but deploying all of their war chests of capital into, bringing across developers and incentivizing users to use apps and protocols that are built on their respective blockchains. So that's why I think you'll see those types of tokens outperform ETH and Bitcoin at least like the next, like until the end of the year. I think that's when the proof will be in the pudding for how much these scalability solutions on Ethereum actually help out the transaction fees. And that'll give everyone a good time to resurface, go up for air, and actually assess the state of play um, going into 2022. But yeah, we will leave it there. And yeah, it brings us to an end of this weekly recap. Historical week for Bitcoin and Ethereum and the entire crypto asset market, which is now over $2.7 trillion in size, and that's the biggest ever. So thanks for tuning in, and I look forward to sharing the news with you next week.